The recovery continues to face a number of hurdles, as you know, and even if the second half is strong, the economy may not look that healthy at year end. Steve Leisman joining us now with more on that. Good morning to you, Steve.
Morning, Scott. Even if the forecast of economists for that strong second half recovery ends up panning out, the U.S. economy is still going to be in the equivalent of a recession by year end. CNBC found that economists look for a 21% rebound in the third quarter, and that's followed by 7% in the fourth. The unemployment rate is forecasted to decline from 11.1% now to 9.8% by December. So you put that into context, that 9.8% unemployment rate would by itself make it the third highest among recessions in the post-war era. It would be eclipsed only by the surge in joblessness following the 81 and 2008 recessions. Economists forecast the unemployment rate will fall to just 7.3% by the end of 2021. That's still almost 4 percentage points higher than the February starting point of 3.5%, a worse increase than all but 4 of the 11 post-war recessions. Speaking yesterday to reporters, Charles Evans, Chicago Fed president, said, "Our outlook is it's going to take us until mid-2022 until we enjoy the level of growth we had at the beginning of 2019. The outlook for a slow recovery, leaving substantial slack in the economy, explains why the Federal Reserve is pointing towards a long period of low rates, why it's not concerned about inflation because there's lots of slack, and why it continues to look for ways to stimulate the economy despite a whole lot of stimulus so far." Doug Holtz-Aiken, I spoke with him yesterday. He's the former CBO director, said, "I've long expected a quick rebound, but then the rest is hard work. That is, dealing with the slack in the economy after that." Now, most of these forecasts don't factor in a second wave of infections or another widespread shutdown. Of course, economists, well, it's happened before, they could be wrong and they could be too pessimistic. The prevailing optimism in the stock market could turn out to be the better economic forecast. But for right now, Scott, it would be really still a continuing recession and slack in the economy, even after a strong recovery.